Okay, leasing strategies. Another little topic here. I meant to talk about this. We were talking about the LLC compartmentalization. So I just want to talk about this for a minute because this is real common in small business, family-run businesses, but also just in business in general. And that is utilizing typically LLCs and corporations to both compartmentalize, but also to allow for some tax savings. So by utilizing leases. So for example, let's say we have a farm. Okay? So we have a farming corporation, S Corp, C Corp, LLC, it doesn't really matter. We have a farm. And the farm is owned, I'm just going to say by one person, just keep things simple. So the farmer also owns land. The farm ground, right? Or it could be an office building, like this. I do this myself. I have my law practice and then I own my own building. It could be a restaurant, it doesn't matter, okay? So you have real estate and then you have the operation business, the operational business. So in the farm, we're going to have that be a separate corporation that's going to do the actual farming, the planting, the fertilizing, the farm employees and contractors, all of the equipment, the plowing, everything, all of the operational side. So that's all going to be done through the farming company. That will typically be an S or a C corporation. And then the land we're going to have separate. We don't want to put the land in the farming corporation or the restaurant or whatever. So we're going to have the land, typically this will be done in a separate LLC or multiple LLCs like I talked about earlier. So the farmer then is going to lease, or go pay money to a lease, and we'll have a rental agreement. I can't spell that. So basically the farmer is going to rent their land or their office building or whatever to the operational corporation. And the corporation is then going to pay the farmer fair market value rent for the land. In addition, it'll typically be what's called a triple net lease, which means that the corporation, as part of the lease, will also pay all of the property taxes, all of the insurance. Typically will require the corporation, the business operational side, to do maintenance. That may be a portion, but typically you're going to want to have basically the entity that's doing the business operations paying all the expenses. So the corporation is going to pay rent to the farmer, and the farmer owns both, right? But now we're going to separate it. So the land will be in a separate LLC, the farming will be in a corporation, or the restaurant will be in a corporation, or whatever your business is. Now why do you do that? Well, you do it for a couple reasons. Number one, it creates a separation for liability purposes. So now if one of our employees in the farm goes out and hurts somebody driving a combine or tractor around and we get sued, the land is not owned by the corporation. So it is separated from a liability standpoint. You create this shield. Even though it's the same owner, this same person, the entity, the corporation, is different from the LLC. So it creates that liability separation. And maybe you have multiple different farm or properties. So that's one reason you do it, to create that separation. Number two, this lease payment, which is made to the farmer will have to declare that income on their tax return, of course. You can't get around that. This lease payment will have to be fair market value. You can't jack it up beyond real market value. The IRS will, during an audit, adjust it down and declare that to be a wage, basically. But the lease payment is not subject to Social Security, Medicare, Medicaid tax. Okay? Rental income, you have to declare it on your personal tax return. You have to pay tax on that. But you don't have to pay Social Security, self-employment, Medicare, Medicaid tax. You're like, well, what's the big deal there? It's 15.3% in tax that you're saving by declaring that to be a lease. And now here's the difference, see? The corporation could pay the farmer a wage instead of paying a lease, and then the farmer's going to have to pay self-employment tax or Social Security tax on that. By pulling that money out of the operational entity as a lease, you're deducting it over here. Got to declare it as income over here, but it's not subject to that Social Security tax. So that's a way that you can save tax by doing this leasing situation. And then the depreciation, depending on what you're leasing, that may include real estate, or it may include some equipment, vehicles, or whatever. There are different tax rules on that in terms of what you can do. But that's one of the strategies that can be utilized to help apportion some of the income coming off of the operational side over to the land real estate side. And again, that also creates that separation of liability, separate books for each entity, and works out real well. This is like a super common thing, and it could be a dental office. My wife's a dentist, so she has her building and then her dental practice. I'm a law practice. I have my law practice over here. I rent my building to myself. Farm ground, a restaurant, whatever business it may be. So a lot of times, you want to keep that compartmentalization. You have that lease arrangement so you can pay rent. Again, it has to be fair market value. You can't jack it way up to be able to do that. All right, I'll tell you what,